Just because transactions are being recorded in QuickBooks does not mean you have bookkeeping. And just because you're getting a profit and loss statement does not mean it's accurate and, more importantly, useful. There's a massive difference between data entry and real dental bookkeeping. One gives you numbers, the other gives you clarity. One keeps your bank account categorized, the other helps you understand whether your employee costs are above 31%, whether your supplies are creeping above the 5.58%, and whether your EBITDA is near the 35% dental average. Today, I'm going to break down the difference because confusing the two can cost you serious money. Here's the problem. A lot of dental practices believe they have bookkeeping handled because transactions are downloaded from the bank feed. Expenses are categorized, a P&L can be printed, and someone reconciles occasionally. That is data entry. But data entry does not guarantee accuracy, proper classification, and clean month-end close, or benchmark comparisons and meaningful financial statements. When bookkeeping is treated as simple transaction coding, what you end up with is misclassified expenses, inconsistent reporting, inflated or understated EBITDA. Financials you can't fully trust. If you don't understand or trust your numbers, you won't use them. So you default back to your bank balance to make business decisions, which puts you right back into reactive decision making. If you haven't met, my name is DJ Bhola, and we specialize in bookkeeping and financial reporting specifically for dental practice owners. We help practices get clean, updated monthly financials so ownership can make better business decisions. On this channel, we focus on clear numbers, better decisions, and higher profits for dental practice owners. Now, let's explain the difference between data entry and proper dental bookkeeping. Data entry looks like this. Download bank transactions, code payroll as payroll, code dental supply as supplies, match deposits, hit reconcile, send a P&L. That is mechanical. Now, here is the problem. If your payroll includes clinical staff, front desk, hygiene, and owner compensation, and it's all lumped together, you can't see whether employee expenses are truly near the 31% benchmark. If dental supplies include dental supplies, office supplies, small dental equipment, and lab materials, you can't properly compare against the 5.58% dental supply average or 5.86% lab expense average. And if accounts aren't reconciled correctly, your income could be overstated or understated, which directly affects EBITDA. Real dental bookkeeping includes monthly proper chart of accounts tailored to dental practices, clear separation of employee expenses, associate/specialist expenses, dental supplies, facilities expense. There's a consistent month-end close process. You can take these numbers and do benchmark analysis on them. Data entry records activity. Real bookkeeping organizes financial information so that it can be analyzed and increase the profits of your practice. That is the difference. Let's look at two practices. Practice A, data entry only. Dr. Miller's office manager categorizes transactions weekly. At the end of the quarter, she prints a P&L. It shows payroll at $380,000, dental supplies at $90,000, lab at $70,000, and there's a miscellaneous account $60,000. Looks fine on the surface, but when we review it, owner compensation is mixed into payroll. Associate compensation is also mixed into payroll. Some lab expenses are coded under supplies. Loan principal payments are misclassified as expenses. When corrected, employee expenses are actually 36%. Supplies are closer to 6.5%. EBITDA is 24%. Practice initially believed profitability was close to the 35%. In reality, it was significantly lower. That is the cost of confusing data entry with real dental bookkeeping. Practice B, which has real dental bookkeeping. Dr. Lopez receives a monthly P&L, a balance sheet, expense breakdown by percentage, and benchmark comparisons. Each month, she sees employee expenses at 30 to 31%, dental supplies at 5.6%, labs around 5.8%, and overhead at about 9 to 10%. EBITDA near the 35% average. Because accounts are structured correctly and reconciled monthly, she can trust these numbers. When dental supplies spike to 6.8% one month, she sees it immediately. That allows quick correction if needed. That is not data entry. That is financial management of your dental practice. The real difference: data entry tells you what happened. Real bookkeeping tells you what it means. Data entry is transactional. Real bookkeeping is strategic. Data entry answers, was this expense recorded? Real bookkeeping answers, is this expense in line with peer averages? Data entry produces reports. Real bookkeeping produces insights. And insights is what improves profits. Here is why this matters for your profits. If your bookkeeping is just data entry, you will not know when employee costs exceed the 31% dental average. You won't know when lab costs drift past 5.86%. You won't clearly see when EBITDA decreases. You won't have reliable comparisons month over month. Without clean categorization and consistent reporting, benchmarking is impossible. And without benchmarking, improvements are just guesswork. For single practices, this can be a huge problem. For multiple practice owners, without proper combined P&L statements, this problem gets magnified. The more the number of the practices, the bigger the problem could be. Real bookkeeping creates visibility. Visibility creates accountability. Accountability improves performance. Here's what I would take away from this video. If your bookkeeping process is simply categorizing transactions, that is data entry. If your bookkeeping process includes clean monthly reconciliations, proper dental-specific expense structure, accurate income tracking, the ability to do benchmarking analysis, consistent month-end closing, that is real dental bookkeeping. And only one of those supports better business decisions. Clean books are not about compliance. They are about clarity, and clarity increases profits. If you're not sure whether your current bookkeeping process is data entry or true financial reporting, start by reviewing how your expenses are being categorized and whether you're comparing them to benchmarks each month. If you'd like help, give us a call.